Good afternoon, and I guess it's mostly good afternoon in most places where people are listening to this. My name is Salman Jaffrey, and I'm with the DIFC, and it is a real privilege and honor to kick off today's conversation, which I think is going to be a really interesting one. Um, a quick preview of how I envision the next hour to go. I'll kick off the conversation today providing a little bit of context on the topic of discussion, which is ostensibly beyond cryptocurrencies and blockchain. What I'll try and do is very, very quickly, in no more than maybe 10 minutes or so, provide a little bit of context as to why this region is so interesting and what role the DIFC plays in promoting technology to take advantage of the opportunities in the region. And then what I'm going to do is to pass on the conversation to my colleague Ali Hassan, who of course will introduce himself later, but Ali is our senior representative residing in the UK, senior member of the DIFC. And together, Ali and I are going to have a conversation with our main guest today, Jehan Chu, who is co-founder and managing partner of Kinetic Capital. I will leave the detailed introductions to Ali. We will have that conversation, and then along the way, we will receive Q&A from our audience, and then hopefully look forward to a great conversation. So without further ado, let me kick it off. I'm obliged to obviously share a couple of ground rules, which most of you are probably familiar with, which is kindly, for those of you who are in attendance, kindly mute your microphones and your cameras, and kindly pass on all questions. You can type them in the meeting chat box, which should be to your right-hand side if you are on a laptop. And then I will do my best to field them at the end, some combination of Ali, Jehan, and I. Without further ado, I'm going to put up a few slides for discussion. Please let me know if there are any questions or concerns in terms of audio or visual. Bear with me for a second, please. Share, here you go. And okay. Right, just Jehan, give me a thumbs up if you can see the screen. Okay, wonderful. So I'm going to talk about essentially quickly through three ideas here. One is to provide a little bit of context to our audience, just as a reminder about why is it that the DIFC is here talking about technology and what we do. So for those of us who are less familiar, the DIFC is a financial free zone. We are like a physical, legal, and regulatory carve-out in the UAE and Dubai, designed to drive economic growth and diversifying away from hydrocarbons. And the reason why we work as a principle, please ask participants to mute their microphones. Thank you. Thank you. Is that we provide access to a very, very large market that we call MIASA, Middle East, Africa, South Asia. And without getting into too much detail, the key messages you want to know about MIASA is that it is an inversion of the demographic pyramids that you have in much of Asia, in certainly in Europe and North America, which is the bulk of this population is really, really young. It's urban. They reside in countries and economies that mostly have been growing pretty rapidly. And as such, whether it is for financial services or a host of other services, this is a region that will have people consuming services and products for a significant amount of time, which makes the business case quite attractive. And to that end, I will just share one slide with you to make that point. We all know this is a region of big populations, not much need to spend too much time here, but at all levels of analysis, whether it's MIASA, MENA, which is Middle East, North Africa, or the GCC itself, you have the same patterns: urban, young, and growing. And that's really, really important because the second theme I want to spend a little bit of time on is that demographic, both the scale and the age and the structure, has made the prospect of digitization really, really interesting and attractive. Look, lots of reasons for this. In some cases, in emerging markets, it's sidestepping emerging infrastructure and going straight to the latest technology. In other cases, it's a cost or scale issue. But the reality is, and again, I'm going to give you a sampling of data points that gives you a flavor for digital. And we'll talk about how blockchain fits into this in a second. But essentially, every region in the world has its own kind of peculiar tendencies and problems that it's trying to solve. For us, or characteristics, in our region, we have incredibly fast and increasingly ubiquitous mobile penetration. We also have very, very peculiar dynamics because of the nature of labor here in terms of flows. So payments, remittances are very interesting. And one of the key enablers, so there's a lot of bottoms-up demand for a lot of these things, but a key thing which I'll talk about, which is where we fit in, is government enablement. And I'll talk about all of this. The kind of pink bar at the bottom is an affirmation of the observation that all of us have today, which is the COVID-19 phenomenon pandemic has compressed the agenda. So all of the erstwhile plans for digitization or for promotion of financial technologies or for the use of blockchain to solve problems has been accelerated with COVID. And I think people have an intuitive understanding of that. I won't spend too much time here. This presentation is available for sharing. On the left, it talks about significant penetration higher than in traditional markets. The second graph talks about increasing penetration rates for smartphones. The third graph talks about the propensity to buy digital. And the fourth piece talks about the potential for financial services. And again, I won't belabor the point here, but just to give you a snapshot. Again, this slide on the remittance market simply says what many of you already know, is that we are on the giving end of at least 3, if not 5, of the largest remittance corridors in the world, from here to India, Pakistan, Philippines, Sri Lanka, and several other places. And that's a unique characteristic of the labor market here. And again, as I will show you, technologies like blockchain have very interesting roles to play in many of these verticals, including in this one too. And we'll talk more about that. But let me spend a moment here and contextualize government policy and bring blockchain into the conversation. Look, we are really, really lucky in the UAE and Dubai, in as much as innovation and technology, and blockchain in particular, has become the pillar for a national agenda, which means that for a crossroads economy that relies on people coming here and living in a frictionless society that enables business, getting services right makes a lot of sense. And so the UAE and Dubai have executed strategies that use blockchain to make this city a smart city. So for anyone who lives here, who has been here, you'll know that the provision of most of your services, beginning with visa to tolls by car, license renewals, bills, all of that is digital. And Dubai has publicly articulated its ambition as well as its track record in being number one when it comes to smart using blockchain technologies for delivery of smart services. 100% of our services are use blockchain. There's 10, there was north of 30 use cases in the public and private sector. DIFC is a member of the UAE Blockchain Council. Dubai was cited by CNBC at one point as being the world capital of blockchain. There was a blockchain competition last year with over 700 applications from like 80 countries. And so we can go on and on. But the key thing is that there are particular problems or business issues that we think blockchain can address very effectively. And we should start to we'll start to examine that briefly. The last thing I want to talk about, as I tell you a little bit about some of the successes we've had and examples of blockchain technologies here, is that enablement is very important, getting it right. So on the one hand, you have government enablement, which is really important. On the other hand, for the financial center, we have a really, really effective strategy that combines the DIFC, which is the authority, and our regulator. Let me share a few things about this. So When you have top-down support and when you have the right rules and regs, you're able to achieve scale, which is, for us in the old world, we aggregated capital and talent in financial services. And we're doing the same in technology, in financial technology, and in the blockchain space. And we can dispute the numbers because they continue to change, but there's north of 400 fintechs in the GCC, we think, over 200 in Dubai. And today we're north of actually probably 170, if I'm honest with you, and a whole bunch of these. Now, I run the risk of citing names of companies at the expense of others, but I want to give you a sample. We have companies like Norblock, which is from Sweden, that uses blockchain technology for KYC AML. We have a company called Withak, which uses R3 technologies to digitize the structuring and provision of sukuk into to the retail market. That's really interesting. We have a company called Addenda, which uses blockchain technology in the insurance space. We have Chain Tech Solutions, which looks at blockchain infrastructure. We have Excellience, which looks at consulting. We have ThinkBlink, which looks at AML reporting. And the list goes on and on and on. And let me close by just reinforcing the importance of having the right strategy that promotes technology and blockchain technology. So this slide here talks about the fact that we have done very well as a fintech market, both in terms of our rankings, right? Top of the screen in black, we have initiatives that the authority has successfully undertaken. So the region's first fintech accelerator called the Hive, which is award-winning and is really, really promoted by sector, by technology, a whole bunch of startups here. We have a partnership with Startup Bootcamp here as well, which is again a globally recognized accelerator. We have innovation licenses. We have a commitment to the future of finance and the larger Dubai Future District. But all of these things can't happen in a vacuum. We work very closely with our regulator, the DFSA, who's done a great job of providing a regulatory platform for us to be able to employ such strategies and attract firms, including the blockchain space. So, we were the first to launch crowdfunding regs here in the region. Over 3 years ago, a tremendous success. We are the only jurisdiction here in the UAE that has an active money services, a comprehensive payments money services regulations that has attracted incredible attention and interest from global and regional firms. The DFSA has looked at cybersecurity very, very closely. And as we'll talk about with Jahan, DFSA is looking very closely at the notion of digital assets. A paper was done in conjunction with Deloitte on custody. So all these things combined prepare the environment for attracting the best talent to come to the region to solve problems or bring efficiencies that are particularly unique to this region. Blockchain technology is a use case that has great resonance. There's a lot more to discuss here, but I'd rather pass on the floor to Ali Hassan to then take forward the fireside chat with Jahan. So let me conclude by saying thank you in advance to everybody who's attended. It'll be a great discussion here, not just on blockchain, but on ways that we can continue to use blockchain technologies to address issues in this market, and so that Dubai can continue to drive the future of finance here from DIFC. Ali, with that, I'm going to yield the floor to you and relinquish the screen as well.
Thanks very much, Salman, and good morning, good afternoon to everyone, and thanks very much for joining. As Salman mentioned, I'm actually based in the UK. I lead our engagement in Europe and North America. And by way of background, I was 14 years a financial regulator, both in the UK and in Dubai. And now I can say that I'm, some people would say on the friendlier side of the fence, where I assist firms that are interested in the region and are looking at our jurisdiction. I'm absolutely delighted to have this conversation with Jahan, who is the co-founder and managing partner of Kinetic, a Hong Kong-based blockchain investment and trading firm. Jahan has got fantastic experience in this space. He's been involved with blockchain since 2013. He is the founder of Ethereum Hong Kong Meetup, founding member of the Bitcoin Association of Hong Kong, and co-chairman of the Blockchain Committee of the FinTech Association of Hong Kong. So fantastic, and it's always good, you know, DIFC in Dubai is very positive about creating bridges with other markets. So welcome, Jahan. Great for you to join us. To kick things off, right? So this session is headlined Beyond the Crypto, and to kick things off, I'd like to sort of hear your thoughts on market developments and what we've seen since that initial focus on cryptocurrencies. And when people like stats, I picked up one stat over the weekend where the World Economic Forum has forecast that 10% of world GDP, around $8 trillion, will be stored on the blockchain by 2025. I'm not sure how you measure that, but you know, it seems that it's going to be significant going forward. So Jahan, you know, your initial thoughts on what we've seen since that, you know, the burst of activity around crypto and how things have been developing.
Yeah, thanks so much for having me. Just making sure you can hear me okay. Thanks again to DIFC and Ali and Salman and the entire team and Clifton for welcoming me. Really excited to be having the opportunity to speak to all of you. I'm quite excited in particular because I think that Dubai and the entire kind of Middle East or Miasa region has an incredible opportunity, and they have been some of the most progressive in the world in embracing and experimenting and promoting and committing to blockchain technology. And I think that there really is an important moment happening, and I'm excited that all of you have kind of chosen to learn more about what might be in it for you. I think personally, I'm also quite excited because I've spent a bit of time in the Middle East, especially in the last couple of years, you know, in Bahrain and in Saudi and in, you know, UAE, exploring and understanding, you know, what's really happening on the ground. The last time I traveled was in Dubai for the Kaufman Fellows Summit, which was a summit for venture capitalists, a global summit, where we were really looking at the entire opportunity of investing in the region and opportunities in the region. So that was quite a treat. So going to your question about you know, where the opportunity is, and also where we see, you know, how much of the world's kind of you know, capital could be on the blockchain. I think I'd start off by saying that it really is an important inflection point happening now, not just in the Middle East, but also in the rest of the world, where blockchain is becoming the norm. It's becoming the baseline. It's not there yet, but the critical mass of governments and sovereign powers and global organizations, as well as you know, major financial institutions and enterprise, you know, whether you're talking about the Facebooks, the Tencents, you know, the Fed, whoever, sovereign funds like Temasek or some others, everybody is in it, and it's beyond the point where they're just in it to show that they're doing something progressive. They're in it because if they're not in it, they understand the opportunity cost to their future, to their economy, and to their infrastructure of being behind. And I think that's what we're seeing now. And that estimate of having 10% of the, you know, what is it, global GDP or something on the blockchain by 2025, I don't think that's I don't think that's a wild kind of estimate. And the one point of information that I would use as a proof point is Chinese central bank digital currency, which has already begun its rollout in select areas of China. And what that means is they are actually migrating their entire monetary system to whether it's a blockchain or a decentralized ledger or a permissioned ledger. They're moving it, and they're moving that trend. They're making that transition to a digital first society and a digital first infrastructure. And that's the cue. So, I don't know how much of the world's turnover China is, but it's a lot, and maybe it's 10%. So that's not a wild type of estimate to me. So maybe I'll just pause there and
No, that's really interesting. And Jahan, I mean, what specific attributes or benefits of blockchain do you think are driving this compulsion to progress and the fear of not being left behind? I mean, what are the actual benefits and attractions that really make it compelling for people?
Sure. I guess the best way for me to explain it is really from my perspective as an investor. So over at Kinetic, which is my firm, we're investors. We're first and foremost investing in early stage technology and Series A rounds of only blockchain companies. And in particular, we're really focused not on cryptocurrency, as we have been historically, but really in traditional equity and traditional venture capital. And the reason why I bring this up is because I think that especially in the Middle East, as well as in many other places, the 2017 kind of generation of their introduction to blockchain really, unfortunately, tended to not be such a great experience. There were a lot of ICO scams. There was very little information, very little regulation. And I think a lot of people got their fingers burned. We see it even now, the kind of remnants of this burning with the Telegram sale, where many people, over $1 billion was invested in this. And now it's all being kind of reversed. So I think that trying to dispel this idea that this is all of what blockchain and cryptocurrency is about is important to start off as a baseline. And then where do we go? It's more around the application of blockchain technology beyond the cryptocurrency. And this is where we get the title Beyond Cryptocurrency, understanding the potential, the investment potential, and what really are the fundamentals, what's beneath the smoke. That's where we are now, where all of these kind of fundamental infrastructure opportunities are emerging. And that's what we invest in. So to bring it back to your question about, what are these kind of opportunities for us? We're really looking at infrastructure and these types of changes. We're looking for how governments are using the technology to revamp their infrastructure in fundamental ways, in how they relate and how they govern and how they track and verify and validate everything from identity to information to even your transactions. And I think that it's really important to kind of have that as the starting point of thinking about how far this goes and why governments are suddenly not just racing to keep up, but actually rethinking what it means to have a digital first society and how they can prepare for that. And in fact, it's kind of beyond the point of preparing, they really need to be catching up, because if you look at millennials, if you look at how we as people, just normal people, interact, so much of it is digital. So much of our day is digital. Whether you're in, the kind of the middle of Africa on a feature phone, or whether you're in, San Francisco in the heart of, kind of Silicon Valley with 5 devices at your fingertips, so much of our interactions are digital. And as governments, it's important to be able to lay that, kind of common sense, as well as practical, as well as kind of protective infrastructure for their citizens. And so that's really where it's coming from.
Yeah, that's interesting. And, and there are cost efficiencies, I guess. There's, the audit trails and better user experiences. Things can get done faster, whether it's renewing a driving license or, subscribing to a particular product or service, I guess.
Yeah, and I guess one way that I like to kind of describe it is that blockchain is the next version of the internet. So whatever the internet is touching today, the blockchain or decentralized ledger enabled internet will be the future. And so when we talk about how far does this go, what are the real opportunities? It's as far as the eye can see, the digital eye, because things are becoming more digital, not less, and things are becoming faster, not slower, and they're becoming more transparent and more traceable and more trackable, not less, and more interoperable. And that really is what the root of blockchain and decentralized ledger enables. So this is, again, coming back to this idea. It's not really just about cryptocurrency. Cryptocurrency is one expression of the kind of impact and power of blockchain technology, but it goes way, way beyond that. And that's why it really will, in a very short period of time, touch all of our lives, whether it's from payments to, like you said, driver's licenses, or even how our governments are able to kind of interact with us.
Yeah, no, I mean, it's really exciting. I mean, just sort of pivoting slightly or focusing down on financial services and some of the use cases in that space. I mean, as I said, as a former financial regulator, I'm quite excited at the prospect of absolutely revolutionizing control frameworks. Both from a in-house capability, but also from a financial regulator perspective, right? I mean, we see the issues around Wirecard unfolding before our eyes currently, and you just wonder, if technology was much more part of the control framework, could issues like that be mitigated in the future? Absolutely,
and I think that to its credit, I think that a lot of the Middle East region, especially kind of UAE, is really looking towards that as one of the benefits of moving to a blockchain stack. In terms of how records are handled, in terms of how things are reported, and how regulation is even enforced. So looking at the Wirecard example, I mean, it's on one hand completely imaginable and completely unimaginable that this could still happen in today's day and age. But it boils down to the very kind of age-old, time-old, either you can call them inefficiencies, you can call them mistakes or oversights, or you can call it corruption and manipulation of information for someone's gain. It boils down to centralized points of authority and oversight. And that's really what blockchain really helps to disrupt and disintermediate. It places transparent kind of systems which have equal access to regulators, to accounting firms, to stakeholders, the ability to really see what's happening behind under the hood. And again and again and again, we're going to experience firsthand the financial impact and the cost of having to account for the mistakes or, again, manipulation or even corruption of malicious parties or kind of incompetent parties, negligent parties. And it's going to emerge that these blockchain systems, whether it's accounting, triple entry accounting, or just having traceable, trackable kind of actions, is going to save a lot of money. It's not just about the reputational hit. It's really about the financial impact. And I think that it's quite important to take this Wirecard example as hopefully one of the last that we'll see, ideally, but I think that it will take some time for kind of blockchain systems to be put into place. But I think even beyond, sorry, go ahead.
No, carry on, Jan. Yeah.
Yeah, even beyond the kind of, auditability, moving forward, I think what's really exciting is the transformation of capital markets. And at Kinetic, that is one of the areas that we are deeply, deeply excited about and have been investing in for a number of years already. It is the transformation of capital markets. And I think that security tokens and digital assets, which are really blockchain-based securities. So for example, imagine you had a share, which instead of being, kind of a paper certificate custodied by a registered custodian, and when you go to like E-Trade or Robinhood, you're just trading kind of ideas of this, which are custodied. You're actually trading the actual assets. Your security token is the actual share. Not only does that give you direct control over what you own, it also gives incredible efficiencies and cost savings and speed savings, and the ability to speed up the market by having T0 settlement, right? Instant settlement, instant transparency, no errors. Of course, it all kind of depends on the implementation, but this is why it's in my mind inevitable that the capital markets, whether it's just the kind of the exchanges, share classes, private and public, but even monetary systems, commodities, real assets, it will all be moving towards a safer, more transparent, more regulated more efficient system. And there is no other system other than blockchain and decentralized ledger types of systems. So that's why, for us, when we invest in companies like Securitize, which is a digital asset kind of issuance platform, or Liquify, which is kind of the local Hong Kong version of that, security token issuance, we do this early because we see where it's going. And I think that, for those of you who are listening and who are trying to make sense of, how do I get into this? I would really think about one of the lower hanging fruits as this transformation of capital markets as blockchain-based assets. It's coming, and it is one of the largest kind of opportunities in this space. Obviously, the timing is important, but it's clear that there is no other way for this to kind of end up.
Yeah. Jahan, yeah, I mean, just on that, I mean, I was just sort of, as you were speaking, I was thinking back, and some of the sort of initial views around blockchain were sort of held back because there were talk of capacity constraints, or it's clunky, it's cumbersome. Have those types of issues been resolved, and so that the rollout will be more possible?
Yeah, it's a really important question, because if you can't figure out how to use blockchain, if you can't figure out how to use cryptocurrency, you can't use it. There's no magic wand which makes this kind of instantly kind of adopted, right? The far future of blockchain and crypto is invisible, where you don't even know that you're using it, because it's basically embedded as this objective trust layer into systems, whether it's government systems or financial applications or financial systems. It's already just in the background, and you'll never even see it. You'll just experience a better kind of more accountable and transparent kind of user experience. But to your question, how's it improved? It's getting there, right? We're dealing with literally a 10-year-old technology. There hasn't been nearly enough investment in the space at the level that enterprise is comfortable with. And that's why we are focused. One of our main kind of investment theses is as an enterprise first growth strategy. We really believe that the first 100 million customers and clients and users of blockchain and crypto will be through enterprise. And I'm using the kind of a larger definition of enterprise, including sovereigns and NGOs, as well as large financial institutions, as well as large tech companies. So whether it's Fidelity or kind of Ant Financial or the government of Dubai, those are all kind of enterprise to me. So we really look towards those as not only the first most likely kind of launching pads or areas of adoption, but also where we think we'll see a lot of the most innovation and progress in terms of better user experience. To your question about scalability, I actually think that's a bit of a red herring, where people that either don't understand or don't really kind of believe in the future. I mean, I don't know how you kind of believe or not believe in technology. It's pretty binary.
Oh, have we just lost Jahan? Hello?
Yeah, I think we'll wait until he unfreezes. Oh, he's back.
Oh, sorry, can you hear me?
Yes,
okay, you're
yes,
back
Jahan,
now.
we just lost you briefly, yeah.
Sorry about that. So I was just saying that, I think that the scalability issue is really a red herring. And I think that there's already more than enough capacity, and it will just continue growing and solidifying. ETH 2.0 is probably the most important kind of canary to look for in terms of capacity. And they should be launching the first of their kind of revamp to handle scalability once and for all, I think in the next quarter or two. So it's an important thing to kind of keep track of, but for everybody on this call, what you'll be worried about by the time you need to worry about it will already be solved by the time you get there. And we're really talking about in the next year or two.
Fantastic. And just a reminder to the audience that Please send in your questions using the chat function. Love to hear your thoughts and questions for Jahan and Salman and myself. Just turning, Jahan, to venture capital and its role in developing innovation. Obviously, in Dubai and DIFC, we have partnered with venture capital firms. We have our own fintech investment fund of $100 million, and that's going to grow to $300 million as part of a Dubai-wide initiative. We're incentivizing VC firms to come and be embedded in our ecosystem, and our regulator is looking at a tailored regime for venture capital to reflect the risks. I mean, what other than capital, what are the merits of venture capital firms? Do they add a little bit more?
Yeah, it's a really important question. Let's first kind of take the capital side. It actually is very important to have capital dedicated to these to blockchain and crypto, mostly because historically there hasn't been a lot of sophisticated capital and institutional capital applied to it. It's mostly been retail, and this idea that the kind of billions of dollars that have been put into the blockchain and crypto space has gone into cryptocurrencies specifically, and ICOs, and that a lot of people didn't have a good experience and lost a lot of money that way. Some people made money, but I'd say a lot of people also, unfortunately, didn't do their homework, and also perhaps were even scammed. There was a lot of scams out there in the early days. So having professional capital, institutional capital, and sophisticated capital entering the space and doing its diligence and supporting companies and founders, and specifically, especially in areas that are underrepresented historically, like the Middle East in terms of startups, I think is very important. And I think this is why I'm excited to be talking to you guys, because I think that Dubai and the entire Middle East has an opportunity to really almost leapfrog the kind of traditional system of technology and technology investment that has been growing out of primarily the US in the Bay Area, and in some areas in the UK, and now I think France is making a big push. The whole system is kind of being disrupted, and I think that the Middle East has a great opportunity to go ahead, kind of skate to where the puck is going, to use a hockey analogy, and set up and really claim its already kind of quite progressive stance on blockchain and cryptocurrency, and invest in this area and welcome this type of capital, and help its founders in the area build the types of businesses that will be foundational and will be global infrastructure. Because one of the notes I kind of took as I was preparing for this is distance doesn't matter anymore, right? That's the lesson of COVID. That's the lesson of kind of digitization and the world becoming more flat. Distance doesn't really matter, and I think that if you can kind of be where people aren't yet, and where people are going, which is absolutely blockchain and as infrastructure, there's an incredible opportunity to invest in this space, to build in this space, to research in this space. So whether you're an academic, whether you're a family office, whether you're a VC yourself or a founder, it's wide open, and you have equal opportunity at this point. That won't be true in I would say 2 years, 3 years. It will. I think that the opportunity will flow towards the incumbents, the Bay Area and the traditional areas of capital and investment. So I think that now is really the time, especially for kind of Miyasa, to kind of stake its position and really lean in.
Yeah, I mean, it's just looking at the Middle East. I mean, obviously, there's sizable capital pools within the region. You have obviously the sovereign wealth funds that people are familiar with, but in terms of quantum, the private capital pool is comparable, and in terms of numbers, 7 trillion on either side is not unreasonable in terms of an estimate, and in fact we've seen close to half $500 billion raised through the DIFC from various investors in the region. And one of the areas in terms of asset class is real estate. Obviously, making investments in international real estate markets, but also the prevalence of real estate as an asset, within the region. And this sort of favoured Middle East asset class. I mean, how do you see, blockchain impacting the real estate asset class, whether it be distribution, whether it be management, whether it be access? What are your thoughts?
Yeah, I think the real estate question is a very relevant one, and being living in Hong Kong and having kind of spent some years here as a child, and now being kind of growing my business here, we're not we're not dissimilar in terms of how we look at real estate. I mean, Hong Kong is one of the most active and expensive and valued kind of real estate markets in the world. But going backwards a little bit, just to the opportunity for investors and why it's kind of important about this kind of capital allocation. Let's just talk a little bit about portfolio allocation and as either a family office or an institution, how to kind of accurately size and price an investment in blockchain. Of course, the easiest thing to do would be to just invest in Bitcoin, but that's not really going to give you the kind of diversification and the type correct risk management that you would like. So I think that for more traditional and more kind of conservative investors, technology and venture capital is already a well-known and well-trodden field. So there's no real questions there. And taking that and basically committing some of that to the blockchain space, specifically the blockchain space, is where we feel investors can start to get leverage and start to get outsized performance even beyond the venture returns. So I think that generally, if I were kind of putting together like a family office's portfolio allocation, I would really look towards starting off with like 1% to 2% of assets into the blockchain side of things, which includes both equity and cryptocurrencies directly. Now there are many ways now. It's so much easier and safer to get access and exposure to cryptocurrencies. You can buy, the equivalents of like ETFs and kind of regulated structures, which will give you near direct access with just a little bit of management fees. So that's pretty the grayscales of the world. And I think that a good portfolio should be around for a blockchain allocation around 60% equity, because I think that's proper. For a more traditional type of kind of entity, perhaps about 30% in Bitcoin or a Bitcoin type exposure, and then perhaps 10% in Ethereum. And I think for me, if it were my family's money, that's how I would look at it. I think that equity is a familiar and trusted, and you understand what you're looking for in terms of revenue and growth and metrics. You know how to kind of evaluate that. And that's why we weight the portfolio more towards the equity side. On the other hand, it is important to have exposure to the cryptocurrency because it's so fundamental to the potential upside. And so that risk reward balance, I think, is quite even. And there are absolutely regulated ways to get access. And I really stress the regulated side of things because that's where people got burned before. There just weren't the kind of vehicles and assets which were regulated to get the exposure to the space. So moving on to the real estate side of things, I think that how to think about real estate, one of the areas really does go back to these security tokens and this idea that you can start to tokenize the underlying real estate assets. And we've seen this here in Hong Kong. One of our portfolio companies, Liquify, is doing exactly this, where they are helping some of the largest real estate developers, especially in industrial real estate and increasingly in commercial and residential, tokenize the underlying asset, either whether it's an apartment or whether it's a warehouse or whether it's a fund itself. And what's the advantage to this? The first advantage is primarily liquidity, the ability to have not be locked up for the entire duration of the maturity of the asset to be sold or to be developed, to basically allow, even in small bite sizes, whether it's $1,000 or $50,000 or $100,000, the ability to have essentially tokens, which are natively shares of these assets, to be sold and priced and have price discovery before the actual asset is quote unquote matured. That price discovery and that liquidity is something that everybody wants. Everybody wants liquidity and wants to have access because things are moving faster and people want to be able to make real-time decisions and not simply have a 7 to 10 year exposure with no options and no kind of leverage and flexibility. So I think that the ability to release a lot of the value, the time value, the liquidity value, and the risk, and to be able to price that transparently in the market for different tiers or levels of investors to come in and take some of that risk. I think that's an enormous opportunity for the Middle East, and as it has been for Hong Kong, and I think will be for the rest of the world. We're seeing real estate be a really large driver for security tokens.
Yeah, I mean, really, really interesting. And as you said, there's similarities in terms of the the real estate markets in Hong Kong and Dubai. And having lived out in Dubai, for 8 years, and we know the demographics there. You have a significant expat population who are renting and then maybe switching, and there's a lot of administration involved around property management, and you kind of think that actually blockchain could completely transform that side of the market.
I'll give you another example, which is a real world example where it's near real world. So there's a trend in the blockchain space called DeFi, which stands for decentralized finance. And what it is really creating financial instruments and financial products around the tokenized space. Now, in the simplest form, it's something like I can take a Bitcoin and I can lock it, quote unquote, lock it into a smart contract, and I can use it as collateral. I can earn interest or yield on it. I can lend it out to others and do it in a largely trustless and transparent way. So I basically substituted all of these like banks and intermediaries and services with a smart contract, which allows me to basically gain value of my underlying asset, in this case, a Bitcoin. Now, when you take the analogy of a security token, which could be a share in an apartment or an apartment building or in a real estate fund, now I can start to use that as collateral. I can take a loan on it. Now, imagine if you were, it's obviously you can take a loan on an apartment, right? You can refinance your apartment and you can get a mortgage, but it's a slow and expensive and kind of quite a heavy lift. But if you could do that for, say, a $1,000 interest in an apartment, that allows you to have the exposure in the real estate as you want it, at the size that you want it, and to get additional types of products based on that in a purely trustless manner. So I could lock my, kind of apartment token for $1,000 into a smart contract, and that stands as collateral and in a trustless way, and people can borrow against that. I can borrow against that, or people could borrow that. Maybe they want to short the housing market or something. It allows them to do that in a way where you don't have to jump through all the hoops. You don't have to, have that kind of heavy lift. And increasingly, we're not there yet, but increasingly in a regulated and compliant way. And that's the real kind of innovation that we're seeing and what starts to open it all up. Now, again, I said that this is not here yet, but it's not far away either. There's a site called Uniswap, which is already using security tokens with proper KYC enabled to basically get access to security tokens. So we are not that far away. And really what the opportunity is again, to release all of this kind of nascent or latent value of physical assets into the digital realm. Like that's really what the opportunity for real estate is.
Yeah, interesting, very interesting.
Hey,
sorry, Salman,
Andy,
you want to jump in? Yeah.
Yeah. So just a fascinating discussion. I want to thank Jahan for all the feedback. As we approach the end of the hour, I just wanted to kind of lob in one question with kind of two kind of aspects. So coming full circle back, if you look at DIFC and the region, right? You have, as Ali alluded to, many trillions of dollars of private capital. A significant piece of that, a percentage of that, is undergoing significant intergenerational wealth transfer. And so these investors are looking at returns a different way than their fathers and grandfathers did, which I think is very interesting. So you have the investor piece, which is very important for us as well. Okay. The other piece that's very important for us is how we are enabling economic development in Dubai and the region. And so that part of the equation relates to how we solve problems in our markets. So for both perspectives, from an investor perspective, as somebody who invests in these technologies, it would be good just to kind of summarize a few of your views on investment opportunities for such investors, e.g., private investors and families from here into the globe. That's kind of one. And then two, just maybe take a punt and maybe using the real estate example as a guess. As an investor, if you were to look at 2 or 3 areas that you think blockchain could effectively solve for us, well, real estate is certainly one of them. What would those be? So investor side and then market side.
Yeah, thanks. I think that for the investor side, the intergenerational aspect is a really important one. I'm glad that you brought that up, because investing has to keep pace with the kind of current state of society and the current state of the world. It's obvious now, that kind of digitization is upon us and it's accelerating and it will become more important. It's also obvious that digitization is, the kind of phenomenon for this generation. So the investors of this generation, the sons, the daughters, the grandsons, the granddaughters, they must start to cut their teeth in investing in this area. Otherwise, they're simply going to try and repeat the success of their parents and their grandparents in a way that is no longer relevant, that is basically obsolete. The idea of purely investing in real estate and purely investing in some of the natural resources, geographically based kind of assets, it no longer makes sense, makes pure sense in an increasingly digital society. Again, distance doesn't matter. The corollary to that is geography and physicality doesn't matter as much. And it is important for this generation of new investors to kind of take that on. And we see that in Saudi with kind of the kind of aggressiveness of really emphasizing technology from MBS. So that I think is probably one of the kind of highest profile examples of investing in technology, and not just any technology, but cutting edge technology, because his investments are really he's not investing in Oracle and Sun, you know what I mean? He's not investing in Microsoft. He's investing in alternative protein. He's investing in, really cutting edge stuff. So I think that's a good kind of guide to think about. And I think that, it's not like you have to go and, blow all of it on Bitcoin, right? That's not what I'm saying. There are responsible and regulated and familiar vehicles to kind of invest in, like venture funds, like in some cases cryptocurrency hedge funds, like other types of regulated assets. So I think it's a half step in the kind of forward direction. And then second, I think the most important areas for the Middle East. Actually, I think that energy is probably one of the biggest transformations that we're going to start seeing, and I think it represents a very large opportunity. It is a bit complicated to invest in because I think that it relies on the larger institutions to move first. But I do think from just an overall opportunity, probably energy, the transformation of energy markets is definitely out there. Now, in terms of areas that I think are more relevant and more accessible to the average investor, to the average kind of family office or entity, probably the financial markets. And again, I will re-emphasize the kind of security token and transformation of capital markets, as well as things like payments and remittance, but blockchain based. That new products and new formats of finance, this whole DeFi phenomenon is going to kind of create opportunities which are really seem quite strange. So for example, If I want to, one of our portfolio companies named BlockFi, they're a New York-based crypto lending, regulated in the US, crypto lending company. So I can take, let's say, $100,000 US, and I can basically buy something called a stable coin, and that would be like a USDC. So basically a fiat-backed cryptocurrency.
1-to-1, right?
1-to-1. You maybe pay a little bit of kind of like a conversion fee. I can park that and basically loan it via BlockFi's platform, and I can get 11% on that, which is a pretty good yield for basically US dollars. Now, of course, there's a bit of technology risk. Of course, there's a little bit of kind of counterparty risk, but it's not any different than any other fintech really that you'd be looking at in today, whether it's a Revolut or whether some of these other kind of more popular platforms. And these we're really at the beginning of these kind of products. You're going to see a lot more of these, and the kind of declining, the negative interest rates that we're seeing, it's forcing the issue. Where do you look for alpha? Where do you look for yield? Increasingly, it's going to be in what seems like very risky propositions, but like blockchain and crypto, but actually it's not that risky. It's increasingly regulated, it's increasingly compliant, it's increasingly available, and most importantly, validated by sovereigns and enterprise.
Just, I'm mindful of time, Jahan, but you sort of touching on an area that's really quite important in terms of establishing trust and credibility with investors, with regulators. I mean, what are some of the initiatives around standardization that the industry is involved in?
Yeah, it's a good question. I mean, I think this is probably one of the areas where the blockchain industry suffers from the same challenges that the rest of the world suffers. I mean, look at the UN, look at the World Bank, look at all of these kind of global institutions which are under attack or under pressure and are having trouble achieving consensus. It's actually arguably even harder with blockchain because it's such a young area. So I think that kind of self-regulation and self-standardization is happening, as we see really strong kind of proof points in Japan, where the two largest self-regulatory organizations, crypto and blockchain, have become recognized by the Japanese government and are absolutely leading the charge and leading the way for overall sovereign as well as enterprise adoption of the technology and the cryptocurrencies. And they're doing it hand in hand with the government. I think one institution to look out for, which is new but growing, I think, and I'm getting involved in myself, is called the Interwork Alliance. This is a cross-chain, so chain agnostic kind of group, which is going to be developing and promoting tokenization standards, open source, which anybody can use, almost like an ISO, almost like a certification system. And there are many who have probably tried this and are trying to do this. The difference with Interwork is that they are backed by Microsoft and Accenture and IBM and UBS and so on and so on. And that's where I think this whole enterprise first growth strategy that we pursue as an investor, we start to see this in other areas like standardization, like you're saying. And so that's partially why we invest this way. This is a nonprofit though. Interwork. I think the website is interwork.org. I think you'll start to hear a lot more about this.
Very good. Thank you. Thank you. I think we're almost done. Salman, I don't think we have any questions that have come in thus far, but if people do have questions afterwards, please, you have our contact details, so you can be in touch with us. But thank you very much,
Ali.
Jahan, for that discussion. Sorry?
Hi, Ali. I think we have a question in the chat by Shakaib on the list of fintech firms operating in the DIFC.
I didn't see that. Where is it? Oh, it's in the chat.
Shakaib, that's certainly something that we can provide.
Sure.
So if you can provide us with your contact details, we can send that through to you. So
before we go, Jahan, I wanted to just formally kind of thank you for a really, really insightful conversation. I think we all learned a great deal, not just about blockchain, but about the financial markets and the potential for change. So thank you for your insight. Thank you for your time. You're welcome here anytime. I mean, and maybe we can organize another conversation in the near future with you.
That's great. So we'll same time next week.
Same bad time.
Thank you so much. I really appreciate the opportunity to kind of speak, and I do think that this is really the beginning of many conversations, with myself and others, and your kind of constituents to really discuss and find the opportunities. It's more than just kind of pontificating about the future of technology. It really is like, how do we do this? How do we invest in this? How do we make money from this? How do we make change from this?
Completely agree.
Excellent.
Okay, well, thank you, everybody, and thank you, Jahan. Thank you, Ali.
Thank you.
Stay safe.
Thank you. Have a great day.
Bye-bye.